Good afternoon. Today is Friday and it's February the 9th. This is the eve of the Lunar New Year. For those celebrating the Lunar New Year, and in particular the Chinese, I'd like to wish you a happy new year and a bountiful year ahead. And the time right now is 5 minutes to 1 o'clock in the afternoon. And last night we had a little bit of volatility despite the fact that we have no major economic news being released other than earning reports. And we do have a bit of a surprise in the earning reports. Most 80% of those companies that make up the S&P 500 has released their earning reports, and the bulk of them do actually hit their estimates. So we have seen equity prices continue to edge higher, and this is no surprise. And but the momentum seems to be slowing down a little bit. In the Dow Jones, we can see that the high traded is 38,783.6, and this is actually traded on Thursday, and we can see that prices are now on the upper end of this range, but the market does looks a little bit toppish to me. Now, if I include in, let's say, for example, a MACD is to let you see the momentum, you will notice that the market seems to be diverging as of late. You can see that the high that we've seen here that was in the middle of December, of course, prices has gone much higher since then. But we can see the indicator has not been following through. There's a bit of a divergence going on, and this is quite typical in the dying move of a move, in the dying phase of a move. So be very careful chasing this market because the divergence are getting to be a little bit of a concern to me. And moreover, you can see that the individual candle bars are getting shorter and shorter in terms of the candle height. And this is also a sign that the momentum does appear to be slowing down. And in the S&P 500, we see the same thing. S&P 500 touched the magical 5,000 points for the first time, but it did not close at those levels. It closed at 4,997.92. So it did not close at the magical 5,000 points, although it did intraday did manage to get to those levels. Again, we can see that the divergence in the S&P 500 is also quite obvious. The high traded was actually in the middle of November. So despite December going higher, and of course January going higher, and February going higher, we can see that the divergence is getting to be quite prominent, although the market can stay diverged for quite some time before it topple over. So, but anyway, the fact that we are seeing this, like I mentioned, the individual candle bars are getting smaller and smaller, thus suggests that the momentum is a little bit lacking. Okay, in the Nasdaq, we have a marginal high traded last night at 17,814.12, and you can see the same thing happening in the Nasdaq 100. So be very careful about chasing this market ever higher. I'm always very, very concerned that we do not have a decent pullback. So this is my concern here. And over in the Nikkei 225, the market has diverged again very badly. So this is quite typical of all equity index across the board. Markets are trading into new highs, but the technical indicators suggest that the market is losing momentum and is in danger of toppling over anytime soon. So my guess is that anytime could be a few weeks from now, it could be tomorrow, or it could be a couple of months from now. So the high traded in the Nikkei 225, this is a 34 years high at 37,280. This is traded this morning, and we can see this is diverging really, really badly. So again, be very concerned about how this market is panning out. Okay, in the Hang Seng, you can see Hang Seng prices continue to edge lower ever since it's traded to 16,455 in the Hang Seng futures contract itself, and we do not have a major problem with the momentum. I think the market may be getting higher. This morning we see the market pulls back to the 50% range at 15,555, and I think it is setting a base for the market to propel higher in the Hang Seng. So I still of the opinion that market have the potential to go up and test the 16,800 to possibly the 17,000 levels, which is acting like a magnet because all the last 3 months of closing is centered around those prices. And in the dollar index, you can see dollar index is in a little bit of a corrective move right now. Ever since market traded to a high of 104.46, Market has been trading sideways, more to the downside than to the upside. But last night we have a bit of a bump up to 104.30, but it has seen loss back its gain. And thus looks like, in my opinion, a three-wave pullback is in the works right now, targeting 103.64 to 103 half levels. So again, if the market does pull back into those areas, maybe for those who are still very bullish on the dollar, could consider taking a buy position in those areas, 103.50 to 103.65. Okay. And in the euro dollars, we can see euro dollars is also rebounding. And I also believe that this is also the corresponding move in the euro dollar. If the dollar index want to pull back, of course, the euro dollar may actually bounce in the three-wave, possibly targeting 108 to 108.30 levels. This could be a better area to actually position short for the next leg down. Okay. And in the precious metal, in the sterling. Now, sterling looks a little bit bullish to me because the three-wave does appear to have more potential. If I have to go counter trend and trade the currencies pairs against the dollar, going long the currencies, I would think the sterling is a great proposition here. Okay, anywhere between 127 to 127.25 does looks like a possibility here. So maybe I should go in and take a look at this potential later on when the London opens. And in the Aussie dollars, the Aussie remains in the same situation as it was. Market has been doing sideways with a bias to the upside, at least for the near term. A three-wave bounce will see the prices go back to 0.6550 to 0.6570 area thereabout. Very narrow range. And if you don't feel like you want to take the chance, maybe you should skip the market altogether going into the last day of the trading week itself. So in the dollar Canadian, it does look very bullish. The market has pulled back 50% and is possibly going higher. So earlier on, I did mention dollar index is pulling back, but the dollar Canadian does looks like a better bet if you do not believe that the dollar is pulling back, is getting ready to go higher instead of coming down. Then maybe dollar Canadian looks like a better bet. But again, it is totally unclear as to which direction the dollar may head. At least whatever pattern that we see are all sideways patterns. Okay. And in dollar yen remains very, very bullish. We can see the overnight high of 149.47. The market right now is again edging onto this level. There's a possibility market may even go higher. So again, all bets are off. We think that the dollar here seems to be very well supported. And in the precious metals, now precious metal was a little bit of a gyration last night. Market actually went down. Okay. On the back of lower than expected weekly jobless claims, and it was almost reversed back to where it was trading before the release of the jobless claim number. So we have a bit of a drop and then followed by a rebound. So this drop here was $20 up, about maybe $18-19. So yesterday on balance, this was actually quite a very volatile move. Now, going forward, if this market can extend higher above $2,044, I think there's a good chance we may be able to position shorts anywhere from $2,046 all the way to $2,055. I think this is a good area to position short and put a stop just above $2,065.50 thereabout. And in the silver market, the market does looks very, very stable. Likelihood to be a bounce. Yesterday, we can see silver outperforming gold for a while, and we can see that the current market right now have a low of $22.12 and is getting ready to bounce. And if it bounce, we can see that this is a potential three-wave, and the target is $23.54 to the December close at $23.78. Now, oil has a major kick up yesterday, and that actually gave it immediate bullish bias. If we do see a bit of a pullback, I think the pullback will be quite minimal, considering we have a flush here. So if we do get a chance to actually go long, there is a bit more potential in oil market, considering the escalation in the Middle East, including the Red Sea. So we can see the idea of this move here was actually triggered by the Israeli Prime Minister rejecting a peace deal, a ceasefire deal, and that actually caused the market to actually escalate to the upside with a high of $76.53 in the WTI crude oil. And over in Bitcoin, we can see Bitcoin has also rallied. Now, this morning we see a rally up above to 46,382, and this is the highest we have seen since the market hit a low of 38,514. So this is actually panning out to be a potential three-wave targeting anywhere between 47,200 to 48,450. So the upside immediately is going to be quite limited. So if you want to go in along, be aware that the target is actually pretty nearby on the relative scale. So do watch out. In the meantime, this is all I have for you. And for those, again, those Chinese celebrating the Lunar New Year, I'd like to wish you guys a great year ahead. And I will see you next Monday. Bye-bye.